EDUC is another offer, Patreon request line. Okay.
Educational Development Corp.
Okay. What is the market cap? 131 million bucks.
Oh, wow. This is so small. 14 PE, check mark.
Okay.
Profit margin, low, 7%. Not a check mark, but high gross margin.
Okay. Yeah, look at that gross margin. Incredible.
Dividend, 2.5%. We'll call it $3 million just to be conservative.
Revenue growth over the past 5 years, Paul, is pillar number 3.
86, 136, 150, 168, 160. There.
How about profit growth over the past 5 years, Paul?
Profit over the last 5 years, 2.1 to 5.6. So check mark there.
Number of shares outstanding, Paul. We want that going down, baby.
It's going up, 8.1 to 8.3. So up just a little bit, but it's up. It's still up.
Current assets greater than current liabilities is pillar number 6, Paul.
57.7, call it $58 million. And they have total liabilities of 50. So extra check marks there. They have more cash on hand than all liabilities. That's a very, very good thing.
Paul, let's look at free cash flow growth for this book company, this children's book company, Paul.
They only recently started making free cash flow. It's still expensive, but they have a lot of growth potential. I think the last year, though, they've done very well. August of 2020, 81 million. August of 19, 35 million. They over doubled in 1 year. Is this sustainable? That's the question. Because look at the previous August, 35. They went down from August of 18 to August of 19. Why did this happen? They made $4 million in that 1 quarter. Why did that happen? If you think that's sustainable, all day buy. If you think the company is hitting you plateau and it's fully sustainable, buy it. This is a great company to buy. Absolutely. The question is this sustainable? Why did they all of a sudden, their revenues just double suddenly like that?